All right. Good morning, everybody. Shoot me a little text, making sure that you hear me, if you can hear me. We got a lot of people this morning. This is great. Text shot. Thanks, Bill. Thanks, Jim. All right, guys. Welcome to the Hurley Investments Trade Findings and Adjustments of February 3rd, 2022. It's good to see so many people this morning. I bet you can guess what I want to talk about. It starts with an F and ends with Acebook. Emphasis on the F. So let me do a little recapping because this is fairly relevant. Last week I talked a bit about the put option, how we use it, what it's for, and why it works for our process and what we do. And I had a bunch of screenshots and showing stocks that were down and how much the put was making up. So let's just recap real quick. Put option gives you the right to sell a stock at a certain price, and I can add for a certain amount of time. That put option increases in value when the stock goes down, because if you have the right to sell a stock at a certain price, if it goes below that certain price, there's value in that put option that has increased because it gives you the chance to sell at a higher price. So if it decreases in value, if the stock decreases in value, So if it decreases in value, it loses value when stocks go up. So just the converse. The price that you can still sell the stock at is called the strike price, and the premium is the amount you pay for the option contract. So a couple definitions that are important just as we're discussing things today. So Facebook. I should say Meta, but whatever, it's Facebook, let's be honest. Meta platforms. Anyone want to give me a brief rundown what happened to Facebook? It can be a simple one word, one liner. What happened to Facebook? William says, missed their earnings numbers. Thank you, William. They missed some of their earnings report numbers. Ida says, dropped 22%. Dee Dee says, guided lower. Bill says, advertising problems. So yes, all of the above. Oops. So let me just go over a couple of numbers. Earnings was supposed to be my goodness, let me type. $3.84 and came in at 3.67. So they missed on their earnings per share. That's their bottom line. But revenue, which is their top line, and that was 33.67 billion versus 33, oops, you get the dollar, 33.4 billion. So they beat on their revenue, and we're worried about revenue growth, slowing revenue growth. So this kind of reminds me of 2018. July 2018, they fell 19%. So this beats their one day fall record. Slowing revenue growth. Okay, so what actually happened? Does anyone know? And Sai, you are 100% correct, but I'm going to try and see what people say. Bill, you said advertising problems. So here is their revenue forecast. Forecast of 27 billion to 29 billion for the first quarter fell below analyst expectations of 30 billion. So I'll say next quarter forecast is 27 and analysts wanted 30.15 billion. Note a couple more things. So Bill, to your point, advertising challenges from Apple's new iPhone policy. That is 10 billion revenue hit estimated this year. Okay, that's one problem. What else do we got? Their reels, in quotation. I don't know if you guys use Instagram, but it's basically just Instagram videos have become more popular, but not as much ad revenue from them. Yes, thanks, Howard. Apple privacy. DD, you made the same point. Jim, image tarnished due to position uncensoring. So that's been in the past an issue, but it's not necessarily what has caused this. That's been a thing for quite a while. And yet they've still made lots of money. So good guess, but today that's not as much our concern. So what else? On their revenue, they're going to start dividing out sections on earnings showing apps, medical, metaverse, numbers to give investors a better idea what is happening on specific sections of the company. They're getting huge. All right. So there's a couple things, and this would be a positive thing, dividing out sections of on their earnings reports that show what their apps are doing, what their medical stuff is doing, the metaverse, just to be more transparent, give people, investors, a better idea of what's going on. And last point, and this is to size credit. They are investing huge amounts of money into Meta, and they're doing it aggressively. So they spent $10 billion on Metaverse. Part of the problem, and I think this is an important point, part of the problem is the news headlines and articles are making it sound like basically making it sound like Meta has lost this because it's performing poorly. But it hasn't been opened. There is no metaverse yet. It's being built. So the reality is it's being invested into and not necessarily should be looked at as lost in the sense that, they're losing active users or they're losing, losing money on revenue or something like that. Or earnings, right? This is really more investing into the future. It's an aggressive investment because they're putting lots of money into it. So anyways, they're making it sound like, and if you go and read on CNBC or any of the articles, it just makes it sound like, oh, Metaverse has lost all this money and it lost 10 billion. And it's like, well, hold on a second. It's being built. It's being invested into. It costs money. It has to actually be active for it to really be a flop, right? It has to actually be a part of the platform that people are using for it to be uh, truly losing money in the sense that it's not successful, right? So I thought that was kind of a bunch of bullcrap. And um, so what do you guys think? Do you think that Apple or Facebook is not going to find a way to work with Apple on this privacy policy or find a way around it? Do you think that Reels becoming more popular is a bad thing? The stories were, if you see those Facebook stories, they're on Instagram too, but those weren't very popular at first. And then they started to become more popular. Reels have become more popular. And I would bet, because Facebook is smart, that they're going to find a way to get more ad revenue from them. Giving a little more transparency so people don't freak out so much on individual numbers or big numbers when individual numbers matter a lot. It's kind of like what Apple did. I'm trying to remember 2019, beginning of 2019, where they stopped reporting uh, certain numbers concerning iPhones because people were focusing too much on it and not the overall view of the company. I think this is a similar thing, gives people a reason to focus on the big picture, which is kind of ironic since they're splitting out different sections, but that is what it's going to do. Investing in a future aggressively should tell us that they're fairly confident that this will be a good revenue source in the future. Now, there's a lot of skepticism, and I can understand that for this metaverse. But what has Facebook done so far that would tell us that what they've invested in and the things that they've produced have been an absolute failure? Yes, they've had a couple things like their crypto that it looks like they're phasing out. Every big company that's aggressively looking to build for the future has some of those. But that in particular was not a big deal. Wasn't they have the money to go into some of this stuff and to experiment, right? The worry is how long this continues, how much it continues, but the real worry is it going to be successful? Because if it is, this is really a good thing. Good thing that they're spending money on it. Good thing that they're trying to be innovative. And for heaven's sake, with all of these concerns, they still beat on their revenue. What are your thoughts? Questions so far? And Sai, thanks for your input. What do you guys think? Is Facebook stupid? All right, we got some. Yes, Bill. Bill says Facebook is down 34%. The market doesn't seem to see it that way. And isn't that kind of how it goes? Market doesn't seem to see it that way. Let's see. They don't seem to see the belief in investing future. There's a better way to say that. Market doesn't seem to see that oh goodness. No phone calls right now. Goodness gracious. Another comment. Let me see. Maybe the market is populated by traders. Let me come back to some of those comments. So Bill, kind of. So my point that I'm making is basically that this is another overreaction. Losing a quarter of your business company value because you barely missed on earnings and beat on a revenue on a quarter where spending on and investing into the future can be more of a static thing and doesn't necessarily affect long-term growth in a way I would see that they should lose a quarter of their value overnight. And so, yes, I think what I'm saying is it is highly an enormous overreaction. And it doesn't have to be retail. I mean, check out this volume. Retail traders do not move this kind of volume. Wait, I mean, you see about their average volume around here, and this was their volume today. Clear up there. I can't even see the numbers. It's over 100 million. Normal volumes around 25 million. So it's not as though it's just retail being stupid, although that's certainly got to be part of it, right? Sai agrees, overreaction. Sai says, well, look at it like a reinvention. Are they unstable? Yes. Their market's an aged market and they need to catch up to a younger market. Reels will catch up. WhatsApp is going to gain ground. Meta will force and take back shares. This is a future play. Love it, Sai. Sai, I couldn't have said it better myself. So I think a lot of what is baked in this into this reaction is people thinking that this is continuing at the same rate forever. Market is forward looking, but guess what? We don't know the future. What we know is that Facebook, like Apple, has lots of cash. They can buy back shares. They can look into the future of how they can increase growth in the future. And that's why they're spending money on this metaverse. Hard to see how it works or what it is right now, and it's hard for everybody to see. But it is such a huge part of what they're changing. To me, that shows a lot of confidence, and they've been able to build Facebook to the popularity that it has now. What is to say, and why is there so much worry that that won't continue into the future? So if I were you and I had money lying around, I would be looking for a point that I could buy more of Facebook. But guess what? If you see this little picture down here, this is a little screenshot of Facebook shares we've got. 3,400 shares of equity, that's stock, and 34 puts. You need one put for every 100 shares. Every option contract controls 100 shares, right? If you were here last week. So these are our numbers. Facebook is down for us $282,000, almost 283, and our puts are making up 218. So they're making up a majority. So a lot of the times I'll get questions as, well, this is insurance. Why isn't it making up every dollar? I don't know why this is so big, but well. Well, all right, guys, so how does insurance work? You get in a car crash, you've paid all this premium. Do you get back all that premium that you paid? No. You pay premium, but you don't get it back when you get in a car wreck. Yes, they pay for whatever your insurance plan says. They pay for fixing it, and sometimes they'll buy you a new car if you pay a lot more on your premium, but you don't get your premium back. There's a cost to it. Okay, so why else would we not be making up dollar for dollar from yesterday? Any guesses? Got one right answer. You can hear me clicking and typing. I've paused my screen so I can go back and put in a little screenshot. Okay. Howard, you are 100% correct. So if you look at these, we have, let me zoom in again on our option contract here, if I can get it to work. We have the right to sell Facebook up at 315. Now that wasn't quite where it was trading, but it was very close. If you look at the chart over here, there's 315. There's where it closed yesterday up at actually right here at 324. Couldn't get above the 50-day. But what is worth 242 right now, and I'll even update it, 241. We have the right to sell up at 315. But there's some time value on that. We have this contract that goes to, you can see this little date right here, February 25th. So the more that the stock goes down and past that 315 level, the more our put option is going to be worth, and the more likely that the stock is going to be below that strike price by the time that the option expires. I hope that makes sense. So for those of you who are new, I'm kind of going a little bit slower, make sure everybody's on the same page. But as Howard mentioned, there's something called delta. A lot of you are familiar with the option Greeks, and those are all the different things that go into how options are priced and how they move in pricing. So because in one part, Facebook was trading up here at 324 and our puts were down at 315 strike, there's some distance there that the value had to kind of catch up. So past that point, we get closer and closer to making up dollar for dollar on the way down. That is called delta. And Maud, I'll get to your question in just a bit. Hang on. So let me push a little description of delta. how much the stock, the option price will change per dollar that the stock changes. So for puts, because they work inverse to the stock price, will be a negative delta. So if, let's say, for every dollar the stock goes up, a delta for a put might be 60 or 0.6, depending on what you're doing, but the 60 cents on a dollar. So it'll be negative 60. So if the price goes up a dollar, your put option will lose 60 cents. If it goes down a dollar, your put option will gain 60 cents. But that delta also changes. The more and more it goes into the money, come on. The more and more it goes into the money, the more it will be closer to a dollar for dollar on the way up, on the way down. Howard gives us a good explanation. Delta is the ratio that compares the change in the price of an asset, usually marketable securities, to corresponding change in the price of its derivative. Said much better, Howard. Thank you. Let's try and get this picture in here to illustrate what I'm doing and saying. Give me just a second if I can get it. All right, there we go. So this is a picture of one account. I'll zoom in here so you guys see what's going on. There's all of the other positions. Oops. Down here you'll see Facebook. There's Facebook shares. Here's Facebook puts. And then across this, you'll see delta. Here's our delta. All of the stock positions are just going to be 1. All of the option positions are going to be some fraction of 1. So here's this bottom one is our put option, and it's -1. So for you math whizzes out there, what does that mean? Howard, you're way ahead of me. Trying to keep it simple. Thank you so much for your explanation. Howard's getting into gamma, and who knows, might get into theta. Just try and keep it simple, but here's a good explanation. Delta changes by gamma for every dollar change. So that just refers to the rate of change of delta. That's what gamma is. So not to get into the mud and the overly into the details, because it's not as important as illustrating the fact that this morning, as of today, our delta on our put options is -1. So for every dollar that the stock goes down, we're making up dollar for dollar now. That's really the only point I was trying to illustrate. So, so what does that mean? I guess this goes to the next step, right? So what now? We have all this value in these put options. They're making up all this money on the way down. Yes, we're losing what, 70 out of 282,000, but we have the right to sell at 315. Does that mean we're gonna sell up at 315? Answer is we can, but we can also sell our put option and buy more shares at much lower prices. Dang, Howard. You should be teaching this class, my friend. Stole the words from my mouth once again. Close put and buy more stock. Brilliant. So how do we decide what to do and at what point? So here's a couple more thoughts. We have Facebook down here. It is relatively close or very, yeah, it's relatively close to some long-term support levels around 244, 240. You can see, if I can zoom in a bit, this is January 21, September 2020. So this is a big support level. You've seen a couple times that it's bounced off from. So the next step would be really to do nothing because it's just one day. We want to see Facebook hold this 240-ish level. Before we make a decision on selling puts, buying new shares. Howard, you seem to know pretty close to everything I've been saying. So if you don't feel like you're there yet, you're certainly on your way, sir. All right. So next step, couple options. Obviously, we got to wait and see. Does Facebook hold this support level or not? Does it bounce from here? Do people realize it's an overreaction? Or does it continue on the way down? So we have to wait and see because we don't know those answers yet. Where the stock goes. Is there some buy the dippers? And I can say, based on reading lots of analyst articles, that can certainly be the case. So let's say the scenario is that it goes down tomorrow. So yes, Howard, great comment. So if it goes above support resistance when it's time to buy more, that's a good way to put it. So let's say we see it build a base over the next week or so and starts to even head up. We'd say, all right, let's cash in the value we have, sell these puts that are worth over 200 grand. And basically everybody from a 20% drop, everybody over who has over 500 shares gets an extra 100 shares. Everybody with 1,000 shares, which based on how many we have is probably not too many of you, gets another 100 shares. But if it continues to go down, we don't see it continue to hold that support level. What we're going to do, oh my goodness, is buy more puts. Because if it doesn't hold this 240 spot, where's it going to go down to next? It could go down to 220. It could go all the way down to 140. You can make a case for I just said 220. So never mind, really it's next legs down is going to be 220-ish, 225. Besides that, it's really just 140. So if we're to add a second set of puts as it continues to drop below this support level, we're now making up even more on the way down. And for every dollar, we could be making up like $1.30, $1.40 on our puts that we're losing on our stock. So we would be making more as the stock goes down than if it goes up. What's cool about that is we can add the possibility of buying even more shares when it finds a bottom, and making up some of what we lost as it's slow to catch up that 70 some odd thousand, right? So I know I'm talking big numbers. Per share is going to be a little more simple than what you want to focus on. But it all has to do with being patient, waiting and seeing, and cheering when it goes down. Maud, let me get to your questions. I kind of answered that first question, when will we close Facebook puts? How far in advance of earnings did we buy these puts? Good question. So I think it was a couple weeks. It was somewhere first, second week of January, from what I remember. And I think we actually also rolled down higher puts. So we had some up at 320, 325, somewhere around there, 330, and rolled them down to 315 as it started to kind of come up a bit, so we could book a little profit. So we even have a little bit of profit if my memory is correct on Facebook puts prior to the earnings. So you know, it's kind of funny. It really sucks, just like it always sucks to see a stock that you have down big. But then you see those puts and you think, how cool is that we can dollar cost average shares of stock without having to scramble and figure out whether we put our house on mortgage to buy more shares. So not only does it lighten the steam, at this point, I start to think, man, burn, baby, burn. Let's see how much we can make up on the way down, see where it goes. The more it goes down, the more shares we can possibly get. Very, very cool. And really, that's all I had for you today. A very awesome example of how puts work and what our process is. And, you know, it doesn't make every dollar on the way down initially, but it's making every dollar on the way down now. And it's just that, it's just a process. It's a process where we don't assume that we know what's going to happen in the future. It's a process where we don't try and outguess where the tops and bottoms are. We always protect for earnings reports for obvious reasons. And, you know, it gives us the time that we need for this stock to come back. Adding more shares at lower prices. We're hitting our break even at lower prices as it comes back up. How long will it take? It can take over a year. It can take a couple years. You saw what we've worked the numbers for on Ford that Kevin did a couple weeks ago. Might have been last week, I can't remember. Ford took 40 freaking years, but it's 100 and if I remember right, we're on 140% annualized return over those 4 years with that. Just being patient with the stock. Couple more comments. Mod, I'm not sure I understand your question. The volatility gets juiced if you buy right before. Typically, the options are a little more expensive the closer you buy them to earnings because they move so much on their earnings, which is why we typically will go at least a couple weeks before. But on occasion, if the stock falls in that 2-week, 3-week time frame before earnings, sometimes we'll sell those puts for a profit, and those will pay for book a profit and pay for the puts closer to where the option is, or excuse me, the shares are trading. Sometimes we'll, if we're bullish on an earnings, we'll just, and the stock has gone up, kind of like how Facebook was, had gone up to 327. We didn't roll our puts up to or excuse me, 324. We didn't roll them up to 325 or 320 where a strike might be at that point, on the expectation that they'll do well on their earnings as they usually do. But it was also not so far away that it felt like we needed to do that anyway. So there's kind of a couple things we can do prior to earnings, but generally want to have that before it gets too volatile and slightly more expensive closer to earnings. Howard, I'd be delighted to. I'll send info over to you, of course. And I also have my email up here as well. If you guys have any questions. Couple other comments, just let me read through real quick. Sai asked, to be honest, some of the sell-off is in fact benefiting large funds as they have different vehicles in place and they too are making up money on the way down, so we are playing the same game. Some funds, maybe the smart ones. I don't know. Usually, hedge funds are usually shorting stocks, and they might use some options as well. Buffett has used options in the form of warrants in the past and since the 70s. But I would think most funds are going to be losing, on the losing end of this, as they're trying to sell shares today. Other funds might be trying to buy the dip, but generally, and I know you didn't want me to share it unless I agree, but you're 30% correct. I would think a lot of funds are just getting their butts handed to them, especially as it's dragging down NASDAQ, tech stocks in general. Guys, is there any other questions? And gals? Good group today. I really like to see so many people here. It's a lot more fun for me. And gosh, it's fun to see and talk about these. You got to be patient. You got to see the opportunity. If you're so focused on the negative, then you will not see the opportunity. And that is even worse than losing money. All right, guys, very good trade findings. If I can mention a trade, it's to keep an eye on Facebook and see whether it develops a support or breaks the support, and play that direction maybe with some puts or calls. Thanks, Jim. That was a joke, Sai. Let's hope so. Your accountant said that $1,000 in Bo stock today. I love it. Go for it. Buy like $1,000 worth of calls. Thanks, Dee Dee. Definitely a sound investment. You can hear my sarcasm from here, I hope. Bose, my goodness. Sai, you have Apple, for hell's sake. All right, guys. Good class. Thanks for coming. That's it for me. Sai wants everybody to know he was joking. All right, guys. Take care. I will see you Monday with Kevin.